Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate and...
Oh, you know what it's like? I'm sure people can relate. If you've been in a bad relationship and that person keeps promising or predicting or anticipating they're going to change, it's going to get better,
right?
And then it doesn't.
Right.
Well, we're supposed to hear by Wednesday if the bad relationship changes or not, right?
Yes.
Okay.
That's right. Okay. So here we go.
We're talking about real estate, of course,
yes,
right?
We're talking about real estate and specifically interest rates and the Bank of Canada.
We're all waiting with bated breath. What's going to happen on Wednesday with the Bank of Canada?
Yeah. So I'm going to read an article in the Financial Post.
Okay.
So here's the headline. Why the Bank of Canada just might hold interest rates again.
Oh, again?
Okay, so here we go.
Weren't we just hoping the
well, here
opposite?
we go. This is obviously not anything from the Bank of Canada. This is an opinion of somebody who, you know, they're an expert in the field. But let me read this. Capital Economics has changed its forecast now and thinks that the central bank will hold on until July.
Okay,
and here's why. While it will be a very close call, the recent resilience of the GDP, in other words, a strong economy, GDP and employment growth leads us to think that the bank will err on the side of caution by waiting until July, said Stephen Brown, Deputy Chief North American Economist. So, data out last week showed headline inflation has slowed to 2.7% in April. The fourth straight month, the rate has fallen within the bank's, and that's within the bank's target range that they wanted. Okay.
Sloan Peterson from Ferris Bueller's Day Off.
That's right.
Anyways,
Ferris Bueller's Day Off. That's classic, right? Bueller. Anyway, let's continue.
That's like someone who doesn't come to the what's it called? Parliament to answer questions, question period.
Right.
Somebody who keeps on,
Bueller.
Trudy.
Okay, let's continue on. I've completely lost my. Okay, here we go. Capital estimates. That's Capital is the Economics is the company.
Okay.
Capital estimates inflation will average 2.6% this quarter, which is below the bank's forecast of 2.9, and it sees a chance that the consumer price index could temporarily hit 2% in August or September, well before the bank expected. But it was the stronger economy and job market that changed its mind on the rate call. Because, so here's what they also know from deliberations at the Bank of Canada.
Okay.
So this is what's been shown so far is the Bank of Canada's summary of deliberations revealed that while some members of the Governing Council are ready to cut, others stressed that with the economy performing well, the risk was lower to leave the rates as they are and won't slow down the economic activity that's going on right now.
That's interesting, and I know the previous caution was like they don't want to cut rates too early.
Yeah.
In being careful not to undo all of this inflationary pressure, downward pressure on inflation, to undo that.
That's right. And here's what they say again, is the Governing Council may struggle for consensus, but in the end, Capital believes it will be more likely that the holdouts will win the debate to wait for more certainty before they drop the rates.
Right. So,
So let me give you some stats of some.
I got things to say.
I know.
I'm not even sure where I should start on this.
Yeah, I was going to say I know that there was a loaded pause there, but let me just give you a couple of stats.
Let's go.
Okay. Some of the different stats and studies and just questionnaires and things like that have been done.
Yeah.
41% of Canadians don't expect the Bank of Canada to cut rates in June. So 31% do, 41% don't. I guess the difference is undecided.
31, like that's probably like the always optimist.
Yeah.
Yeah.
So here's the other thing. and I found this to be very interesting about why they may want to hold, is they don't want to get ahead of the U.S. Federal Reserve.
Right, and we've been talking about that, I think, consistently with this like mortgage rate cut change.
Right.
American economy is doing well.
Yeah.
Of course, like the American economy, Canadian economy, the federal government's been pumping money into it.
Yeah.
So, if that's helping our economy appear better than what it is, perhaps, we've been talking about, not ourselves, independent news providers have been chatting about, a recession. The numbers are sort of hidden.
Yeah.
I'm not going to pretend that I know what the numbers mean or don't mean when it comes to like the economy.
Yeah.
Like we look at the reports and so there's been chatter probably like since like this 7 rate hikes.
Yeah.
They're like, the economy slowed down, the real estate market slowed down. It's affected sort of everything in general.
Yeah.
We're in a recession. We're in our economy is contracting.
Yeah.
But we haven't really said that we're officially.
Yeah. And I think the point is now they're saying the economy is coming around or getting stronger or making improvements. But here's the thing with when we talk about the U.S. Federal Reserve, is they're looking at 175 points and Canada's looking at 250 for the reduction. So if they go with that, here's what the number looks like, that it will be the biggest gap since 2007 and will probably at that point push the U.S. or the Canadian dollar down to like 71 cents.
Yeah, I don't mind that, but that's interesting. Okay.
So
and we know what 2007 looked like in general.
Yeah, that was right before the meltdown.
That was a hot market.
Yeah.
Everything was great.
But
economy, everything was booming.
Yeah.
Yeah.
And then
But that's like measuring a peak.
Yeah.
And then 2008, 2009 was
a
whole different story.
Yeah, I guess so. At the end of the day, what we have from this is that it sounds like, at least in the opinion of one observer in the industry, that they are not expecting the reduction to get announced here in June that we were all expecting.
Yeah.
And interestingly, one of the things that they're saying, the reasons to not expect it is because of the strength of the economy and the growth of employment.
Oh, it's not just me. Like, yeah, I've heard that before. You cry wolf, cry wolf. It's like you keep getting repeatedly told something.
Yeah.
And it's at some point, it's like, I almost don't believe it anymore. Right?
Yeah.
Like it could happen. That's just my sentiment.
Yeah. And, here's, I was surprised when I actually thought about this and kind of came to here's what my take is on it.
Mm-hmm.
I see the rationale behind it and it makes sense, to hold off, because the Bank of Canada has to make a decision, not just for you or I, the homeowner, but they have to make a decision for what they think is the greater good of the economy of the nation.
Of course.
And holding to the lines as far as inflation, as far as consumer price index, and to take to some extent to keep in mind the Canadian dollar.
Yes, and still, like the last rate hike, it wasn't 18 months ago.
Yeah.
So before we feel the effects of the last rate hike, like we still need to give it more time.
Right.
Right. And I found an article. This is sort of related. I think it's good context. Bank of Canada rate cuts will take months to help consumers.
100%.
This Scotiabank chief risk officer says.
Yeah.
And I don't need to read the whole article to like know that. Like it could take not just one quarter. It could take a year before that benefit.
100%. This is what we said when they were bringing rates up. Is wait a minute and see what these rate increases are doing.
Instead of jacking
Instead
up
of going bang, 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 bang,
times,
bang, because we're not seeing, we won't see that for 3 to 6 months.
Yeah, or even longer.
Or longer,
right?
Yeah, or longer. Yeah.
So, it for the interest rate to stay the same, that would be great. It sort of provides stability. It's predictable.
Yeah.
I think under those conditions, even if the cost might be higher for borrowing for an investment, for like starting a business or buying a house, at least you know what you're getting into.
Yeah.
If it's volatile and all of a sudden it starts increasing,
Right.
then there's less action happening in the market, all markets, right?
Yeah.
So at least there's some predictability now.
Yeah.
If it goes up a little bit, that's just me saying that. But, You know, that not based on anything, just based on sentiment.
Yeah.
You know, it'd probably only go up a little bit. I just think the journey, we're not done in this journey. I think like the Bank of Canada has already said, like, it could be a bumpy ride to like go through this.
Sure.
Right?
Yeah. Yeah. And I would come back to this then, because I know from the BMO survey that they did, there's 70% of buyers are waiting.
There's so many people on the sidelines. Yes.
Waiting for the reduction.
Yes.
Okay. I'm going to come back to something we've said repeatedly on the channel as well, is in whatever market that you're in, if you can make the numbers work with the current interest rate, you are better served to get into that market and buy something now before an interest rate reduction where the prices will be a reciprocating number. Interest rates will come down, prices will go up.
Yeah, and it's generally, you know, we know markets are hyper local.
Yeah.
One part of the market might be completely different from a different part of the market, even in the same market. So I'm saying, like, you know, there could be a whole bunch of condos for sale. They're not moving quickly, but single family dwellings are.
Yes.
Detached homes are.
Right.
You know, so I'm just clarifying that.
Yeah. And
but really, the market is really either balanced or in a buyer's market. You know, there's some spots, some hot product where there is multiple offers, and that's, you know, I think it's just a whole lot less common than during the pandemic, during like a seller's market.
Sure.
So, you know, even with that, it's a really good opportunity to negotiate with the seller.
Sure.
That's it, right?
Yeah.
You know, maybe the mortgage renewal thing is affecting some folks more than others.
Yeah.
And there might be more greater motivations. Not everybody, but you might be able to find somebody that is a little bit more motivated to sell and more willing to negotiate, but not give away their house.
Yeah.
But more flexible.
Sure.
We'll put it that way.
Yeah.
Yeah.
Yeah. So that's a quick one, but that's just what we're seeing. So we'll find out later this week what really happens.
Yeah.
Or next week, I guess.
Well, I'd post this one right away, right?
Okay. So we'll find out later what's going to happen. But if there is no increase, you heard it here first. Hey, thanks for joining us today. Hope you got some good information out of that. Please take a minute and like and subscribe. It helps us out with getting the word out there. If you know anybody who you think needs to see what we're talking about, please let them know about it.
And of course, if you're thinking of buying or selling real estate in the Greater Victoria area or anywhere on Southern Vancouver Island, you can get a hold of us. Our information is in the description below, and we'd be happy to help you. Thank you so much for watching, and we'll catch you in the next video.
See ya.